Hey there, if you're a senior or retiree and you've ever felt confused or stressed about taxes, today's video is going to be really important for you because the IRS has made some huge changes for 2026 that can actually save you a lot of money and possibly increase your refund. And I'm going to break it down in the simplest way so you can understand it without feeling overwhelmed, so stick with me until the end. Because there's one detail that most people totally miss, which could cost you thousands if you don't know it. And I promise you, by the time we finish, you'll feel much more confident about your taxes this year. First, let's talk about the standard deduction, which is the amount of income the IRS lets you earn before you start paying federal income taxes. And for 2026, the IRS has increased the standard deduction for everyone due to inflation. So for single filers, it's now $1,600. For married couples filing jointly, it's $3,200, and for heads of household, it's $2,450. And this matters because if you're over 65, it works together with a special bonus that can really reduce the income the IRS taxes. And speaking of bonuses, there's a new senior bonus starting this year, which is something very few people know about. And it allows people 65 and older to get up to $6,000 extra if you're single or $12,000 for married couples filing jointly. And this can apply whether you take the standard deduction or itemize your deductions, which is a huge deal because many retirees don't realize that this could lower their taxable income significantly. So for example, if you're a retired couple filing jointly and you normally would owe taxes on $40,000 of income, this senior bonus could reduce the taxable income to $28,000, which in many cases could mean paying hundreds or even thousands less in federal taxes. And the IRS clearly lays out the rules for this bonus on their website at irs.gov, and you can also check detailed explanations on empower.com. Satya, which goes over exactly who qualifies and how the phase-outs work, because this senior bonus starts to phase out when your modified adjusted gross income exceeds $75,000 for single filers or $150,000 for married filing jointly, meaning if you make more than those amounts, the bonus gradually decreases until it disappears, which is why it's really important to know your exact income and plan ahead, because missing this detail could cost you money. And this is exactly the kind of thing that causes so many seniors to overpay taxes every year without even realizing it. And now, along with the senior bonus, the tax brackets themselves have shifted for inflation in 2026, meaning the IRS increased the thresholds at which higher tax rates kick in. So the top rate of 37% now applies to single filers above $640,600 and married couples filing jointly above $768,700, and all other brackets have moved slightly higher as well, which might seem small, but when you're filing taxes, even a small shift can affect the total amount you owe. And this is especially important if you have investments, retirement accounts, or other income streams that push your total income close to those higher brackets. And if you want to see all the IRS inflation adjustments, you can visit their official bulletin at https://jochcontent.gov, delivery.com, accounts, USIRS, job bulletins, 3F65FE1, which lists every threshold, deduction, and credit adjustment for 2026, making it the safest place to verify the numbers yourself. And while we're on the topic of seniors, it's also important to talk about Social Security, because many retirees get nervous about whether their benefits are taxed, and this year, the rules haven't changed much. But the taxable portion of Social Security benefits still depends on your total income, including pensions, retirement account withdrawals, and the senior bonus. And according to ssa.gov at https://www.ssa.gov, if your combined income, which is your adjusted gross income plus non-taxable interest plus half of your Social Security benefits, is between $25,000 and $34,000 for single filers, up to 50% of your benefits may be taxable, and if it's above $34,000, up to 85% of benefits may be taxable. And for married couples filing jointly, Those thresholds are $32,000 to $44,000 for the 50% tax and above $44,000 for the 85% tax, which is why the senior bonus and standard deduction increases are so valuable because they can lower your taxable income and reduce how much of your Social Security benefits are taxed. And if you've never looked at this calculation, it's worth running your numbers carefully because some retirees are shocked to learn they could pay tax on most of their Social Security income without realizing these deductions and bonuses exist. And another thing that's changing this year is the average refund expectation because according to https gennypost.com 2026-02-06, business when to expect your IRS tax refund UTM. The IRS projects that many taxpayers could get around $1,000 more in refunds on average due to the combination of inflation adjustments, senior bonuses, and other credits, which means if you file carefully and use these new rules, you could literally be hundreds or even thousands better off than last year. And that's why understanding the details is so important because it's easy to just follow last year's tax habits and miss out on new benefits. And speaking of credits, the Earned Income Tax Credit and Child Tax Credit amounts have also been updated slightly for inflation in 2026. So if you're a family helping children or a caregiver, this could impact your refund as well. And if you want exact numbers, the IRS updates them every year. And you can always check https://www.irs.gov for official tables and calculators. And one tip I give seniors all the time is to double-check which deductions you qualify for, because people often forget medical expense deductions, property tax deductions, charitable contributions, and even some retirement contributions. And combining those with the senior bonus and the higher standard deduction can lead to a significant reduction in taxable income, which in turn lowers the total tax owed. And this is why many people end up surprised by a higher refund than expected if they use all the tools available. And now let's talk about filing timing, because the IRS officially starts accepting 2026 tax returns early this year. But if you rush without checking the new thresholds, you could accidentally underclaim a deduction or miss a credit. And this happens more often than you think, because seniors and retirees often assume that nothing has changed and just fill out forms the same way they did last year. And that's why I recommend checking the official IRS site https://www.irs.gov or SSA for Social Security details because these are the most reliable sources and prevent mistakes. And another important point is about penalties for underpayment, because if you take too much out of retirement accounts without accounting for the senior bonus or new deductions, you could end up owing a penalty at the end of the year. And this is where careful planning comes in, because it's not just about what you owe this year, but also about keeping your estimated tax payments accurate for future years. And many retirees don't realize how these minor adjustments, like the $6,000 senior bonus, can cascade into bigger savings when combined with proper Social Security planning, standard deduction increases, and inflation-adjusted brackets. And another thing that's worth noting is that state taxes might also be impacted, because while the IRS handles federal taxes, your state may or may not follow the same adjustments. So checking your state revenue department's website is a good idea. And combining that knowledge with IRS.gov information ensures you maximize deductions and credits. And to give you an example, a married couple filing jointly with $80,000 in combined income, 70 years old, with $20,000 in Social Security benefits, could see their taxable income drop significantly using the senior bonus, standard deduction, and by accounting for the portion of Social Security benefits that are now not taxable because of the lower combined income. And if they also contributed to a retirement account or had deductible medical expenses, this could lower their federal tax by several $1,000s, which is why being aware of these changes is crucial. And for a practical tip, I suggest logging into SSA.gov to check your Social Security benefits and taxability, then cross-reference with IRS.gov for the standard deduction, senior bonus, and income brackets, and using online calculators can help you estimate refunds before you file. And one last thing to keep in mind is that even small miscalculations can lead to delays in your refund or even underpayment penalties. And that's why understanding all these updates and checking official sources is not just helpful, but essential, because missing the senior bonus, standard deduction, or Social Security adjustments could literally cost you thousands. And all of this is why, if you're over 65 and planning your taxes for 2026, taking a few hours to study these updates and check your official numbers on https see www.irs.gov and https see www.sa.gov can make a huge difference. And honestly, it can feel overwhelming at first. But breaking it down into smaller steps, checking standard deduction, senior bonus, Social Security, tax brackets, credits, and potential penalties makes it manageable. And now imagine combining all these strategies correctly. Not only could you owe less tax, but your refund might actually be higher than you expected. And this is exactly why I recommend paying attention to 2026 changes, because unlike previous years, there are some new rules specifically benefiting seniors that weren't there before, and these changes are public and fully verifiable on IRS.gov and SSA.gov, so you don't have to worry about rumors or scams. And for full details, I've added the official links in the video description so you can visit those websites and verify the information yourself. And before we wrap up this section, think about this. Even a single decision, like choosing to take the standard deduction plus the senior bonus versus itemizing, can affect your total taxable income and refund, and understanding this early gives you options to plan withdrawals, pay estimated taxes, or even adjust retirement distributions to minimize taxes. And now, if you're wondering about how many seniors are affected, estimates suggest that millions of Americans over 65 could benefit from the senior bonus alone. And when you combine that with Social Security adjustments, inflation-adjusted brackets, and standard deduction increases, it's safe to say that most retirees filing jointly will see some positive impact. And this is exactly why ignoring these updates is costly, because you might leave money on the table that you're legally entitled to. And now imagine walking through all the numbers step by step. Your standard deduction, senior bonus, Social Security benefits, tax brackets, potential credits, penalties, state taxes, and any other deductions like medical or charitable donations, all combined into one. Plan to minimize tax liability and maximize your refund, and by doing that, you not only stay compliant with IRS rules, but you also make sure you're taking full advantage of every benefit available. And that's exactly what I'm trying to help you do in this video. And now here's a little cliffhanger for you. There's one small IRS trick many retirees don't know about that could boost refunds even more, and I'll explain it in the next portion of the script, so make sure you pay attention because this detail is easy to miss but can have a huge impact. And if you're watching this and thinking, wow, taxes are complicated, don't worry. That's exactly why I'm breaking it down step by step in simple words. So even if you've never filed on your own before, you'll understand exactly what to do. And remember, all the official numbers I've mentioned, including standard deductions, senior bonus amounts, income phase-outs, tax brackets, and Social Security rules, are verifiable at irs.gov, ESSA.gov, and the other official sources I listed, so you can double-check everything yourself, which is the safest approach. And honestly, taking just a few minutes now to review these changes could save you hundreds or thousands of dollars this year. And many seniors are shocked when they realize how much they overpay simply because they aren't aware of new deductions or bonuses. And if you're thinking about filing early, this is the perfect time to review these updates carefully, because rushing without understanding them could mean missing a bonus or deduction. And the best part is that these rules are fully legal, fully official, and designed to help retirees. So you're not taking any risks by following them carefully, and when you combine all these elements, standard deduction increases, senior bonus, inflation-adjusted brackets, Social Security tax adjustments, potential credits, penalties, and state taxes, you get a complete picture of how to optimize your 2026 tax filing. And now, to make it easier for you, I'll continue in the next section with more examples, tips, and practical steps to maximize your refund and minimize your taxes, because this is where most people get stuck and frustrated, but once you understand these details, you'll feel confident and in control. And that's exactly what I want for you.